Hey guys, what's going on? Sean and I this week want to talk a little bit about what's current, and we have a new Fed chair president, correct?
Yes, Mr. Wash.
Wash.
He's going to wash our interest rates lower.
We had a doozy talking about how to pronounce it exactly, but yes, Warsh is the new Fed chair president. So it's nominated and elected by President Trump. So overall, a lot of people feeling interest rates with his backing of Trump will go down, right?
Right.
That's what they're.
Well, that's what Donald Trump wants interest rates to go down, and that was the whole one of the reasons why we're seeing this change now.
Yeah.
With Powell out and Warsh in. But I think there's a lot of questions.
Yeah.
First of all, does he have the power to bring interest rates down by himself?
Well, that's so I get, and these are all great questions that I've been fielding for a while. So the fact you have a new Fed chair president, you're going to go through and you're going to have someone that has like an agenda. They're going to have someone that does have something that they're backing by, in this case, the president, which we know is lower rates. But he alone can't just go and do that. He can't just go and just say rates are lower, boom, and just write it into power. So there is a committee, a federal board. It's made up of chairmen and different governors is what they call them, and they have to be elected there, and they have to vote. So if Warsh would like those rates to be lower, they have these Fed meetings. If you've been seeing like the weekly updates that I do, especially on Fed President or Fed Day when they meet on the interest rate decisions, they vote. So
right. Yeah. So what? How much influence does any president have on what that Fed chairman and his committee does?
All right. So, and this is a big thing, independency. So being independent. So it's a big push right now that they all know Warsh being elected, Trump wanting those rates to be extremely low as they could possibly go, being independent, that the Fed is not impacted politically by a different branch of government. In this case, it would be the executive branch coming in. So it's a very big, so it looks like so far he does want those rates to be lower. He has that back. That's why he's kind of in there. But just as of recently being elected, he has had a lot of speeches that he does say he wants to act independently. Now, saying one thing and doing the other thing we've seen can happen often, and not to say it will. But like I said, the last little comment was there's a committee that has to vote. So yes, they keep it independent, but there will be more of a push to go that way versus who we had just leave office.
So what exactly does, so right now we hear all this news about inflation being up again, right? And obviously that's probably because of the crisis in the Middle East and the, with Iran and all that stuff.
Yep.
So inflation goes up. And generally speaking, the Fed's decision on lowering interest rates probably won't happen because of inflation. How does interest rates affect inflation?
Yeah, so that's a great question. So the number one way to battle inflation is to raise interest rates. That is the way traditionally, historically, that always happens. That's where you see inflation go through the roof. The way you go through to battle that is by taking rates higher. That's their number one tool in the arsenal that they have. The Fed as a whole, their overall goal is there's a twofold mandate: price stability and maximum employment. So as long as we have good employment and the prices are stable, there's an environment that we could go ahead and possibly look for those lower rates. But it's, like I said, it's a two-headed snake. So the one is outweighing the other. It's like a seesaw. In this case, the inflation component of it. That's why a lot of the news stuff across is not seeing any rates. Now I heard the hike word come out more and more, and that's what it's doing. So hopefully my take is that we do have a new Fed president. Our former Fed president staying on the board for a while, so he'll be there. There's going to be less speeches, I think, with this one, is what they said. And I'm hopeful that things cool down in the Middle East. They come to a resolve. Price of barrel of oil drops back to somewhere in the 80s. That would be fantastic. Just that in itself, we'll see those rates come back down again.
So today I went to get gas this morning, and gas in Pennsylvania was finally down a significant way. It was $4.08 last night when I went out to the store. It was still $4.49. So it literally dropped like 40 cents overnight. Which is good.
Yep.
So when is the next Fed meeting, like the decision? When does that happen?
That's coming up. I believe that's coming up next month. If I'm not mistaken. They don't meet every single month. Sometimes they take breaks in between. So it will be coming up shortly. The last rate decision they had wasn't too long ago where they kept the rates the same. I would imagine for the next couple meetings, especially with the new Fed president, it'll probably be the same. They'll probably keep rates about flat. He's not going to want to go in and shake it up. But they always have their meetings. They have who voted which way. So it's interesting to see who votes when and how they vote, to see how many are. And that's how you can really tell if rates are going to drop, because you're going to start to see more and more of the presidents the governors vote that they would like them to be lowered.
Right.
Now, there are other tools in the shed too, the quantitative tightening, quantitative easing, where they take money off their balance sheets. So that also does help. That's another component without taking rates a certain way into helping interest rates overall. So there is talk about that too.
Okay.
Yeah.
So where are rates now, and where do you see them going?
Yeah, it's a great question. So first of all, if I knew the answers definitively on this, I'd be on my yacht somewhere in the Pacific. It'd be really nice somewhere warm. But if I did have a crystal
You'd also
ball,
be able to give me the lottery numbers for next week.
Yes.
Okay.
You just come with. It's all right.
All right.
If I had it right now with where we are, we went up to about 6.75. So, and we were down at the lowest where a lot of my clients were refinancing, 6.7. I know.
I was going to do this. I was going
6,
there,
7.
but I'll get yelled at by my daughter if she
15-year-old
watches this. And she's like, Dad, that's so old.
My 15-year-old's watching this. He's probably going to say. 6.75 is where we were. Now, we were all the way down to like a 5.75. And that's where a lot of people were pulling the triggers on refis. A lot of people didn't. And I'm just going to wait. And they were kind of like, the pigs get greedy, get slaughtered type thing. And they missed the boat, went all the way. So now we are back down more of like a 6.3, which is great. So, and that's even without the Fed doing anything. It's just tied to oil prices. So, so biggest takeaway that I can say for this week, and people out there listening and watching this, don't be fooled just because I have a new Fed president that now I'm just going to wait and that's going to make rates drop. I have clients that ask me that all the time. There's still a committee. They're still voting. It very much wants to go that way, but we have some headwinds. So best we can ask for is the Strait to get back opened. And I really think once we see oil drop down to those $80 marks, if we can get there solidly where they were, somewhere in that $80 barrel, we will see those rates dip back down probably like a 6.25, 6.1, which would be fantastic.
Right. And what's the advice that you always give to a buyer? Date the rate, marry the house.
Yes.
Right.
100%.
So even though these interest rates are fluctuating, 6.3, 6.75,
yes,
5.875, whatever it is,
yes,
we shouldn't be trying to time the interest rates in order to buy a house. We should buy the house that we love.
Correct.
And then deal with the interest rate later, because you could always refinance it.
Absolutely. And if the rates go up to 8%, guess what? You locked in at 6.3.
Right.
And we're talking between 5.8 to a 6.5, somewhere in there. We're talking on an average house in our area in the valley here, $150 a month.
Right.
Where do you burn $150 this month? I blew it over the weekend. My kids got bored. We went to go see a movie. It was unbelievable how expensive it was. Yeah. But we went. It was fun. But I didn't, you know what I mean? Just rationalize it. And appreciation in our area is still
rapid.
Yeah. So you're going to miss out on that. So yeah, that's where we are this week. So.
Well, it's good stuff.
Yeah, it's all good. It's all good in the momentum, guys, where we're going, heading in the right direction. But again, takeaway is it's going to take some time. But again, to Sean's point, date the rate, marry the home. That's always the best decision. So
there's no smarter guy in the mortgage industry than here, Matt Wieder, guys. So if you mortgage questions, this is your go-to guy.
Good or bad, the ugly is just the numbers. It makes my job easy. So thank you, appreciate it. All right, see you, Sean. See you guys next week. Take it easy.